Hey everybody, Jamie Trull here. I am your resident financial literacy coach and CPA, and I am here to do a whole entire session on employee retention tax credit, so ERTC or ERC as it is sometimes called. And the reason that this is really important right now, this relates to all the COVID stimulus funding and all of the government funds that have become available for that. Now, this wasn't really a huge topic of conversation back in 2020, the reason being that you could not get this tax credit for retaining your employees if you got PPP. And for most people, it made more sense to get the fully forgiven money of PPP and use it how they needed to, and they didn't really fool that much with ERTC. But now the rules have changed. Shock me, shock me. So now we're talking about the employee retention credit again. So first, let's talk about who this really relates to. If you're a sole proprietor, if you don't have employees, I'll see you later. You don't need to stick around for this. This does not apply to you. This is for people who have W-2 employees in their business outside of just themselves. So we're going to talk through exactly what this employee retention credit is and why it's super duper important that you know this stuff, you guys, because this is huge. It can be really, really big for a lot of businesses, both in 2020 and going forward in 2021. So there's money you can get and claim for 2020 retroactively, and we'll talk about how to do that. And there's money that you can get in 2021 if you know the rules. And let me just warn you, the rules are complicated. They are convoluted, they are complicated, and I'm going to do my absolute best to walk through this with you. Now, I do believe that you're going to want to have a CPA, you're going to want to have somebody that helps you with this calculation if you figure out that it does apply to you. But if you want to know whether this applies to you or if this is something worth your time and effort, I want you to go download my spreadsheet, okay? I have made a worksheet for you guys. It also includes a whole decision tree that we're going to talk through on here. So jamietrull.com/ERTC. But I'm going to talk through the rules first. Whether you get the spreadsheet or not, we're going to talk about the rules. Who qualifies for ERTC? So we're going to talk about 2020, and then we're going to talk about 2021 because you guys, they changed the rules and they changed them a whole heck of a lot. But importantly, remember, even if you got PPP, you can get this. And actually, you want to be aware of how this ERTC works because it may change. If you have not applied for your forgiveness on your PPP loan yet, you might want to wait a second because some of the information I'm going to share with you could actually impact how you apply for forgiveness with PPP. And we will talk about that more towards the end. Okay, so right now, what you are seeing on your screen is going to be the 2020 ERTC decision tree I've put together. So I will tell you, this gets complicated, but if you walk through the decision tree with me, you will see exactly which section you go to and can start to figure out whether or not this applies to you. Now, when we're going through this, we also have some tabs within the same workbook. So this is in that same workbook that I told you about. And you're also going to have some calculation tabs. So I'll talk about how all of this works together. But I think the best place to start is on these eligibility tabs. So let's talk through 2020 first and get our head around that. In 2020, you can get up to $5,000 per employee. Okay, $5,000 of a tax credit. That's money they actually give you back. That's not a percentage. You don't get a percentage back. You get the full $5,000 max per employee. Okay, so jumping into this decision tree for 2020, like I said, 2021 is a little different, so let's talk about 2020 first. Were gross receipts for at least one quarter in 2020 less than 50% of gross receipts for the same quarter in 2019? So we're talking Q1 versus Q1 2019, Q2 2020 versus Q2 2019, and all the way on down. Now, it tells you to go see the gross receipts tab to determine eligible quarters. So in this case, we're going to jump right on over here because if we're not sure, you know what, I don't know if I was down at least 50% in gross receipts. Now, this is revenue in the door we're talking about, money that came into your business. So if we come in here and we put in some numbers, I think that's going to help us kind of illustrate how this is going to work. So this is all part of that same spreadsheet. Okay, so I went ahead and put some numbers in just to kind of illustrate what I'm talking about. So you are going to see here that the first quarter in Q1, we had a non-qualifying quarter. We were only down 10% versus 2019. In Q2, however, we were down 52%. So we were down more than that 50% threshold. So that means that we are going to have a qualifying quarter for Q2 of 2020. That means you would qualify for the ERTC in Q2 of 2020. Okay? Then in Q3 of 2020, you have a less than 50% drop, but we're still calling it a qualifying quarter. Why is that? Well, if you come back over to our eligibility section, in here you'll see if you had one quarter that had that 50% drop, then we're going to come down to yes. So it says qualified wages paid in this quarter are eligible, and future quarter wages are also eligible until the end of the calendar quarter in which gross receipts are back to 80% or greater of gross receipts for the same quarter in 2019. What the heck does that mean? Well, once you've recovered, right, that now you have had less than a 20% decline, i.e. you're back to 80% or more when you compare year over year gross receipts, well, you still get to take that quarter, right? Because we don't really know when the quarter's going on, whether we're going to hit the 80% or not. So you still get to count that quarter, but the next quarter after that will no longer count. That's when you stop having an ERTC eligibility. So in this case, we were eligible for Q1 or Q2 and Q3, but not Q4 because we were covered in Q3. Hopefully that makes sense. But if you get a hold of this spreadsheet, it will make a lot more sense. Now, let's say we didn't have, however, a quarter, that at least one quarter in 2020 that was down at least 50% in gross receipts. Well, are we totally out of luck? Maybe not. Let's go this way. So we'd say no. And then it would ask us, was the business fully or partially suspended by a government authority during any calendar quarter of 2020? So a lot of people were, right? A lot of businesses were shut down either partially or fully. And shut down, it does have to be by government order. So just having less business wouldn't necessarily count. But if you could not be open, then you would count. But let's say you weren't, well, then you'd come down to you were not eligible for ERTC for 2020. But if you were, if we said yes, indeed, that does count, we were actually fully or partially shut down for part of it, then it's going to ask you, were average 2019 full-time employees greater than 100? I know, we're getting nitty-gritty. This is where this gets really tricky. So if you have less than 100 typical employees, and in this case, a full-time employee is someone who works at least 30 hours a week. So you're going to look back at 2019, figure out how many full-time employees. This is not full-time equivalent. This is actual full-time employees, i.e. people that worked more than 30 hours a week. How many did you have? If that was greater than 100, you are going to basically only be able to count wages for ERTC that were paid to employees who were not working at the time. So furloughed employees would be able to get that. So if you paid employees, even though they sat at home and didn't work, then you could get ERTC for them. It's probably going to be a much smaller amount than if you could actually qualify for this 50% gross receipts. Now, if you have less than 100 employees though, well, during the time you were shut down, all wages that were paid to employees are eligible for ERTC. Okay? So that's important to point out that it depends on how many employees you have. Now, this rule changes in 2021. So we'll get to that here in a minute. But overall, you want to be able to look and see how many employees did you have. That'll help you determine. And that's true even if you met the 50% gross receipts. Once you come over here and you said, actually, yes, I did have a 50% decline, then we're going to go and figure out were average 2019 full-time employees greater than 100. Same exact question as over here, right? If they weren't greater than 100, great. All of those wages will count for ERTC. Now we're going to talk about this in a little bit. You do have to back out funds that were paid with PPP funds. So if you paid salaries with PPP funds, you do have to back that out. You can't double count it. You can't get a tax credit on the same wages that you paid with PPP. So we'll talk about that a little bit more on another tab. But let's say the answer was, yes, I have more than 100. Well, it's the same thing. As long as they were furloughed with pay, you can get ERTC with them, but only the wages that were paid to employees who were not working. If you didn't furlough people with pay, there's nothing that's going to be eligible for ERTC for you in 2020. So that's how it works for 2020. And like I said, you're going to be able to come over to the gross receipts tab and actually figure out exactly which quarters apply to you, which quarters do you qualify for ERTC. And then once you figure that out, you can go figure out the qualified wages, which I'll go over here in a minute. Now, let's just jump over really quickly to 2021 and talk about how it's different. A lot of things are the same, but a lot of things are also different because, why not? So in 2021, it asks at the top, were gross receipts for Q1 or Q2 less than 80% of gross receipts for the same calendar in 2019? i.e., did you have at least a 20% reduction in gross receipts when comparing back to 2019? So that's not a typo. We're actually going back 2 years. We're taking Q1 of 2021 and comparing to Q1 of 2019. And Q2 of 2021 and comparing back to Q2 of 2019. The ERTC is only in effect right now through June 30th. It's possible that gets extended if needed, but right now it's only Q1 and Q2 that are going to be eligible for ERTC. So that's why we're talking about just those quarters. You'll notice that over on the 2020 eligibility, you had to be down by 50%. Now you have to be down only 20%, right? Your total amount of gross receipts has to be less than 80% of what it was previously. So it's a lesser decline, essentially. So that's kind of nice. So you can qualify even with a lesser decline in 2021. And then the other part of this is that when you come down to the second part, it says were gross receipts for the immediately preceding quarter less than 80% of the gross receipts for the corresponding calendar quarter in the calendar year 2019. What does that mean? Well, again, you can see this a little bit better on the gross receipts tab, but basically it means if you qualified in Q1, you're going to qualify in Q2 of 2021. Because if you had at least that decline in Q1, you're also going to qualify the next quarter. Now, if you didn't qualify in Q1, you can qualify in Q2 if you meet this first requirement. So again, you're going to see it when we come over to gross receipts. And then it's kind of a similar answer here with 2021 ERTC. Basically, you're going to say, okay, if that doesn't apply to you, we're going to go through the same exact question around whether your business was partially suspended or not during any calendar quarter in 2021. If it wasn't, then you aren't eligible for anything. If it was, then we go to the number of employees test to determine what wages are eligible. Well, when we look at this, you can see that it's a little different again than 2020. Instead of 100 being the threshold, it is now 500. So if you had average full-time employees in 2019 of greater than 500, then during the time that you were shut down, you can only use the employees that were not working. Those wages for furloughed employees that you paid anyway are going to be eligible for this ERTC calculation to be considered qualified wages. If you have less than 500 employees, then the great thing is you are going to be able to use all wages paid during that shutdown. So whether you were partially paid or not, whether those employees were working or not, you are going to be able to do that during the time that you were shut down. Now, again, we're going to go same exact thing. Let's say we did meet that gross receipts reduction. We're going to come over here, and basically it's talking about qualified wages paid in that quarter that you're eligible can go towards ERTC. You just cannot count wages paid with PPP funds as qualified wages. So we'll talk more about that. And then same question here, we're average 2019 full-time employees greater than 500. And this is just dictating how much, which employees' paychecks can you use? Is it all employees or just the ones that were not working or were furloughed? Okay, so after you've gone through the decision tree, we're going to start over on the gross receipts tab. And we also have an instructions tab, of course, if you want to re-review how to put this together. But up here, we just mainly talk about what's considered qualified wages, how do you determine if someone's a full-time employee, and then some information about the differences between 2020 and 2021 for you. But like I said, we're going to start down here and we're going to do these calculations. And then we're going to come over to 2021. We've already done them for 2020. We realized that we qualified in Q2 and Q3. And then for 2021, let's say we came over here and did the same thing. So maybe in Q1, we were down only 15%, but then we had a worse Q2, right? And in this quarter, we were down that 20%. Essentially, if you're down more than 20%, it's going to be a qualifying quarter for you. So in this case, we qualify in Q2 and Q3 of 2020 and Q2 of 2021. That's what we figured out on here. Now, importantly, for the purpose of figuring out gross receipts, that's going to be the money that came into your business. That's your revenue before any expenses are deducted. You do not include in here PPP, any kind of EIDL advances or grants, or any kind of loans, because those are loans and don't impact your income. And you also won't include any unemployment compensation you might have received. That's actually going to be personal income that shouldn't be running through your business. So ultimately, this is where you will figure out the gross receipts test. Now, there is a point down here that says if no specific quarters meet the reduction, remember, you may still be eligible to get some ERTC credit if you were partially or fully suspended by government order. So make sure that you're looking at that as well. So once we figured out which quarters apply to us, we're going to come over to this qualified wages tab. So here in this qualified wages tab, we're only going to put information into the qualifying quarters. So I don't need to put information into Q1 because that wasn't a qualifying quarter. I don't need to put it into Q4 of 2020 because that wasn't a qualified quarter. So I would just look at Q2 and Q3 of 2020 and put the information in there. So I can list all my employees out here. This is full or part-time employees that would count for the purpose of actually calculating out this credit. And let's put some amounts in. So let's say in this case, I paid them $4,000 in Q2 and maybe $6,000 in Q3. Our total qualifying wages is $10,000. Our estimated tax credit is 50% of that for the year. The max tax credit you're going to get in 2020 is $5,000 per employee. Okay? Now, let's say this was larger. Let's say this was $6,000. Oh, look, it's still total qualifying wages of only $10,000 because that is the limit and an estimated tax credit of 50% of that. If we actually paid our employee less, well, then our total qualifying wages would be the amount paid, and then the tax credit would be half of that. So it's half of the qualifying wages. Qualifying wages max out at $10,000, and then the estimated tax credit maxes out at 50% of that. So this will take all of that into account and do this for you. When you put that information in there, it will calculate out those estimated tax credits. And then when you're listing them all, it'll come over here and tell you what your total 2020 estimated tax credit is. Now remember, always go and check this with a CPA because these calculations can get complicated, especially when we take out PPP. So that's something to remember. See, this says Q2 paid, exclude amounts paid with PPP. That's because you actually have to subtract out any wages you paid with PPP funds that were forgiven, right? So in this case, if you used PPP money to pay those employees, then you will have to back that off of each employee, which I know can get really difficult because we may not know exactly how much of the PPP relates to each employee. But for the purpose of ERTC, we really are going to have to do a calculation of that and figure it out, okay? And then for Q1 and Q2 of 2021, well, we decided Q1 we didn't count, but for Q2 we did. So employee 1, we paid $6,000 maybe, and then $3,000, and we can go through and list all of our employees. And what you can see here is that the total qualifying wages still maxes out at $10,000, but it's $10,000 per quarter. That's important to know. Over in 2020, it was $10,000 for the whole year. In 2021, it's $10,000 per quarter. And then the tax credit is actually 70% of that total. So you can see the 70%, when we max out at $10,000, we're going to get an estimated tax credit of $7,000. Now, even if we did qualify, let's say just for the purpose of this, let's say we did qualify in Q1, right? We're going to put in a bunch of numbers here, and you can see that we max out at $14,000 estimated tax credit. And like I said, you guys, this is free money. This is money that is going to be given to you from the government. This is not, you're not going to get a percentage. It's not a tax deduction. This is actual money given over to you. So this is where I want to talk about a couple of things. So again, if you want to get a copy of that spreadsheet because you don't want to do all those calculations yourself without any help, well, go to jamietrull.com/ERTC and you can grab your own. But here are just a couple of things to think about with this. So with PPP specifically, right? If you are going to be claiming ERTC and you got a PPP loan or you're getting a PPP loan in 2021, I want you to think about what happens when you apply for forgiveness. Because previous to ERTC being able to be claimed for people who had PPP, previously the common idea was, well, just use PPP for payroll. That's the easiest thing to do. It has to be at least 60%. But when you're filing for forgiveness, if you have enough payroll, that's oftentimes the easiest thing to put on your forgiveness application and not worry about rent and utilities and other operating costs that are now eligible, right? Just claim your payroll and let that be that. This changes things a little bit. So the reason this changes things, if you have not yet applied for forgiveness for your PPP loan, you might actually want to do this calculation first because you want to be able to maximize the amount of wages that you can claim your ERTC, your Employee Retention Credit on. And if you have to back out PPP funds paid, right, to use to pay your employees, well, then that's going to actually potentially impact the amount you can get from ERTC. So this is where the strategy comes in. This is where you should absolutely get an accountant to walk through this and help you with this calculation. Make sure that there's someone who is knowledgeable on this subject. But this is where you're going to want to figure out, okay, how do I get my forgiveness application forgiven and yet maximize the amount of wages available to take the ERTC credit on? That is the question, right? So that's something I just want you guys to think about if you're in that boat where you could get both. Additionally, the question I get all the time is, how, though, do I actually get this credit? Great question. So it's a payroll tax credit, which means it's on your wages, right? It's a credit against payroll taxes paid. So for 2020, since these rules are new and just passed at the end of December, you can actually amend your Q4 941, your payroll tax reports, and claim that amount back. And you can either get a refund of it or you can actually apply it to future payroll tax bills if you want to. Depends on what you want to do. Now, we're still waiting. There may be further guidance that comes out that simplifies that process, but right now, what we're hearing is that the best way to do it is to go and actually amend that 941. For 2021, you're going to take this on your 941. So this is something really, really important to not only work with an accountant on, but also your payroll company, whoever's doing payroll for you. They should be able to help you with this and make sure you get the credit that you need. So again, for 2021 in Q1 and Q2, if you apply, you want to make sure that you are actually putting those wages in as the correct type of wages to be able to claim that tax credit on your quarterly reports. So I know that was a lot. I know it was a lot. And I know your head is probably spinning a little bit. So I want you to get your hands on this spreadsheet, jamietrull.com/ERTC. It has the decision trees within it so you can walk through it and see if it applies to you. It has the tabs to calculate which quarters are going to be applicable to you to be able to potentially take this. And it's also going to have that calculation of the actual qualified wages and the estimate of your actual tax credit that you could get back. So again, I do recommend working with an accountant, but this can be a great thing to do before you go and spend money on an accountant. You can do some analysis and figure out if this even applies to you. And if it does, go take it on over to them. So I hope you have a wonderful rest of your day. Make sure to like and subscribe. I have lots more videos on things like this. I have a lot of videos on PPP and EIDL. So make sure that you subscribe to my channel and I will see you next time.